Hey traders, ever wished you could have a robot butler making your buy and sell decisions for you? Well, trading systems are kind of like that. In this video, we'll take a quick dive into the world of trading systems, exploring how they work, their advantages and disadvantages, and whether you should hand over your financial fate to an algorithm. So what are trading systems, you might be asking? Well, imagine a program that scans the market for you. It analyzes the data and suggests what to buy and sell based on predetermined rules. That's a trading system. They can be simple, using technical indicators, or complex, incorporating advanced mathematical models. There are a range of different types of trading systems. Firstly, there's technical analysis-based trading systems. These rely on chart patterns, indicators like moving averages, and they analyse historical data to identify entry and exit points. There's also fundamental analysis-based trading systems. These consider things like specific company financials, economic data, and the news to make the trading decisions. And then there's algorithmic trading. These trading systems use complex algorithms and AI to identify opportunities based on massive data sets and market patterns. Now, there are some big positives to using trading systems. For starters, they help to eliminate emotions, which is a big issue for a lot of traders. At the end of the day, computers don't panic sell and humans do. We make silly decisions as humans. Systems stick to the plan, avoiding the costly emotional decisions, saving you from all the angst and the worry about what's happening in the news. Then there's also backtesting. You can test a system's performance on historical data to gauge its effectiveness over the long term. From that, you can see how it's likely to perform in all different kinds of market conditions and different situations, so you know what to expect and can see the type of results that you're likely to get over that long period of time. If you're shooting from the hip and you're making your decisions on the fly, you can never really test to see how you'll perform through different types of market conditions. You're running blind and you're simply hoping things will go your way, rather than being really structured in your approach. Also, with a trading system, you can find opportunities that you may have never had on your radar before. Because it's done on a computer, you can scan thousands of stocks literally in seconds, looking for those companies that meet the right criteria for possible profits. This can save you heaps of time over doing it the old manual way, where you had to spend hours scouring the news articles or the internet looking for hot tips or trying to dig for those gold nuggets. Put simply, trading systems make your research so much more efficient. Now, it's not all sunshine and lollipops when following a trading system. There are some negatives too. Firstly, some trading systems are black box systems. What I mean by that is a black box system is something that you can't actually see what's generating the buy and sell signals. And when you don't know the logic behind it, you may not be able to tell the potential risks that you face when following that particular system. But hey, let's face it, if you've got money in a regular old managed fund right now, you probably don't know exactly where that money is being invested or why it's being invested in that place anyway, right? Another potential negative with trading systems is you have to be okay with losing trades. Not really a negative. No system can predict the future. It can only generate signals based upon the highest probable outcome. They usually get their outperformance by cutting losses short and letting their profits run. So you've got to have a strong will and be able to stick to your plan and stick to the rules at all times. If you don't have the right mindset to stick with your system, there's no point having a system at all, really. It works because it has rules to be followed. If the rules aren't followed, your outcomes become much more uncertain. So you've got to leave any ego and opinion at the door. Thirdly, technology. You have to be able to use a computer or a smartphone to follow a trading system. Now, for most people, it's the 21st century. Technology is part of our everyday life and it's easily managed. But it wasn't too long ago when it may have been a big issue for a lot of investors. These days, many systems are user-friendly and the signals are easy to get. But there are still some pretty complex systems out there, so you've got to choose one that suits your particular skill set and one that you're comfortable trading with. So should you let a system make all of your investing decisions? Well, not necessarily. Many traders use systems as tools. They think of it as another string to their trading bow. They might allocate a certain amount of money towards a particular system and they follow it religiously. Then they still have another portion of their money doing something else, some other sort of investment where they make their own decisions. It's entirely up to you as an investor and how confident you are with the system that you're using as to how much money that you want to put into it. For instance, many of our members here at Share Wealth Systems, they tell us that they have a large portion of their capital allocated towards our SPA3 investor system. That's because they're really confident in using it it and they've been doing it for years, so they put more money into it. However, someone first starting off would use a much smaller amount of money and build that up over time as their belief and their trust in their system grows. Okay, so who uses systems? Trading systems are really for anyone who wants to take the decision making and the worry out of their investing. It can be from beginners all the way to experienced traders. Systems offer valuable assistance on what to do in the market at all times. They'll tell you what to buy, when to sell, and when to get out of the market altogether and sit on the sidelines to protect your money. Trading systems are also used by hedge funds and institutions because they use complex algorithms for high frequency trading and other sophisticated strategies that those hedge funds do. And market makers and brokers use systems to maintain order book liquidity and facilitate smooth market functioning. So in conclusion, trading systems are powerful tools, but they're not magic bullets that somehow can predict the future for you. Use them wisely, stick to the rules, and start small until you're completely confident in your system and your ability to follow it to the letter. So if you'd like to learn more about our mechanical trading system SPA3 Investor and get a hands-on demo version for 2 weeks, you can register for our Systemised Investing Challenge and see what it's all about for yourself. The link is in the description below. And while you're there, don't forget to like and subscribe for more trading insights. And of course, remember, past performance is not a true indication of future performance, and that this video is for education purposes only and shouldn't be considered particular financial advice. Okay, that's it. As I said, quick video today. Thanks very much for watching, and until next time when I show you around the markets again, I wish you consistent, objective, and peaceful investing. Bye for now.